Well, good afternoon, everybody. Joe with you here. It's Market Roundup time. It's the 17th of October. It's a Tuesday. Let's jump into the market action. Take responsibility for the outcome. You guys understand how this works. First off, I'm going to get into some meaningful news of the day. Then we're going to move over to the current market analysis, including the charts, basically following along with price action. And then, as always, we're going to talk about trade setups and opportunities in the markets moving forward.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
Moving directly into our market analysis, it was a day that we would expect at these levels. And what do I mean by that? We went absolutely nowhere. In fact, I don't think you can go much less than what the markets did. Let's jump right into it here. The Dow, 0.04%, and the S&P down 0.01%. I mean, that's about as tight as it gets. Definitely an indecisive day. We had some pretty interesting numbers come out last week that showed a lot more inflationary I would expect pressures when it comes to the CPI and the PPI. Today we had retail sales come out hotter than expected. We'll talk about that here in a second, but the markets are just kind of parked at some certain levels. So the Russell bounced. It's been beat down over a long time, so it just had an oversold bounce here. Oil up slightly and gold flat as well. What was it? Well, let me get to the daily news here. Retail sales come in higher than expected. Another inflationary number with little selling. Now, that doesn't mean that it's not going to be bad. It doesn't mean that the Fed might not act, but we're in the midst of a pretty strong oversold bounce, and that's kind of where I think this was caught. We did see the CPI number kind of come in late in the rest of the day there and start to sell off, so we had a really good rollover. But the last 2 days here, gap up sideways and inside days, a lot of indecision going on in these markets, but we're still at some bearish levels. So keep that in mind that we have to break below these or roll over or break higher to move forward. Let's finish up what I've got here with the advanced decline line. 39 decliners, 56 advancers. Like I say, it's kind of a little bit of a bounce, but not by much. We really finished flat overall. Some outperformed and some didn't. 73% below the 50-day moving average, 27% above. So it's still slightly on the bearish side, and we are definitely in a bearish trend. Let's jump straight into the chart here, and you'll see what I'm talking about. So we did have a pretty good move to the downside towards the end of last week, and I thought that was going to be a beautiful, nice confirmation of this downtrend. It's still actually in line, folks, between the 20 and the 50-day moving average. So I definitely have to stay glass half empty here. However, it is really holding its own before it really wants to commit to roll over. So it's not that there is a lot of fear there. It's just, I would imagine a lot of bottom fishing going on and maybe a little bit of, hey, is enough? Can we see a bounce? Things of that nature. Rob did make mention on Friday's class, which I also absolutely agree with, is this is a rate thing. If we see these inflationary numbers, we could see money coming out of some of these stocks that aren't yielding as much and going into some rate specific investments. Apple itself is giving 5% for its corporate bonds, where its stock's yielding about 0.5%. So things like that, you can see a lot of, hey, let's put our money to where it's going to work for us, and that could be something as simple as this. Let's move on to the Qs, as they do look a little bit stronger than the SPY, as they are slightly, well, it's now above its moving averages here, the 20 and the 50. This bounce was a little bit better. It seemed because it did cross above the moving averages. However, it is still in line with this descending pattern. So overall, folks, you got to stay. For those of you who are bearish and we're trading these markets in front of us, -2, -1, you got to stay there. It hurts right now because we're bouncing out of some resistance levels, and maybe some of the trades that you have on aren't doing very well. But patience should prove profitable for you. Let's hope. We'll see if these markets can turn around, but it's going to take something very specific to move these markets around. So not a lot to report on, guys, when it comes to these charts we've been talking about over the last little bit. There's nothing new. We're just kind of an inside day kind of sideways. Take a look at this. You got a lot of browns, a lot of dark greens. The only dark red I have in here is Nvidia, and there's some sanctions on China when it comes to exporting AI chips, which is going to affect the biggest AI producer that the U.S. has. So that's kind of what's moving Nvidia. Past that, it's just kind of sideways, right? So what's my outlook? It hasn't changed. Above the 20-day moving average, but since the slopes are both down and the 20 is below the 50, I give it this little yellow color. But it's zero for the week. We were talking about this at the end of last week. Is we could see a good push higher, but it might just kind of chomp around between these moving averages and stay volatile. I do believe that. I'm still at a -2, and the reason being is because I do love this bear rally up between these moving averages. The longer term trend does look nice and bearish to me so far where we sit. So I'm not going to do much when it comes to changing my trades that I have on already. Look at the potential trades. I had some bulls trigger today. Why? Well, because we've been up. A little bit of a gap on Monday, stayed higher, and then sideways today, and some of the outperformers are outperforming. Where specifically? Well, we've been talking about these sectors for quite some time. Gold, energy, and healthcare. That's all. In fact, all those up there are those things. So let's take a look at the ones that I liked. The one. This isn't the Omega Healthcare Investors. It's a REIT, but it's still in the real estate healthcare sector. What I like about it, and you'll see this type of pattern with most of what I had to offer today, is this kind of ascending triangle base breakout. RRC was one I was debating showing over this one, and you can see, well, you'll see it. It's a little bit higher than this, a little bit more extended, but it's generally doing the same idea, and it's just money going into what's moving higher. That's basically it. Will these pull back? Of course they will. When the markets roll over, of course they'll pull back. Things of like if that's kind of what you're expecting. But it is a nice place to put some money to the bull side if you're expecting a little bit more consolidation and maybe a float even higher above resistance levels. I don't like to pre-trade market direction. I like to wait for direction and follow. It will feel like you're slow, but if you have something past a week and a half, 2 weeks, then you'll be right on time when you get these corrective moves that we're seeing over the last few days. Moving to sideways, I didn't have anything on the sideways. I've got 2 on there. This is DraftKings, and I will err to the upside. I have Google on this as well. I don't have the chart, but if you guys want to take a look at it, please do. This does have a symmetrical triangle feel, so if I was to err sideways, it would be to the upside. I should say, if I was to err to favor a direction outside of sideways, it would be to the upside. This could be an opportunity to play as a symmetrical triangle breakout. For any of you who are looking for another bull, it's right there. But if this does roll over, then we could see some consolidation. And what I'm looking for in the consolidation is going to be right above this area here. Let's call it 32. And I want to go to 28. That'll just be a little bit tighter. You'll find with consolidating trades, credit spreads, condors, butterflies, things like that, the tighter you get these spreads, the more money you'll make credit-wise, if that's your style. So moving on to our last trade on the bear side. This is PayPal. A lot of my bears, every one of them, you guys have the same watch lists, are moving higher. They're bouncing. And the most oversold stuff, the stuff that we like to stay bearish in, has probably had a couple of days to where they're moving a little bit higher. And it sucks. It hurts. This is why you kind of position size to outlast the overall trade versus using stops. A lot of times you get whiplashed out of stops and then it rolls over and you wish you were still in the position. PayPal here I like. And the reason being is because just quite simply it's below this level of resistance, this 58 marker, right where the 20-day is. You could open this up to around the 60 area, and you can see there's this level that it just wants to stay below. So I'm looking at it as a bear rally, something I don't want to get into now to the bear side. However, if the markets do roll over in the next day or so, Rob may mention this too on the weekend class, is it will have to bear it up again. I'm okay throwing a few more bears back on if we do indeed roll over and confirm another move to the downside. Well, that's about it. Kind of a short class, but hey, we didn't get much from the last few days. We've just kind of bouncing around. So the overall trend remains bearish for now. Stay with your outlook and positions. A lot of traders say, well, should I pull some money off the table? And my answer is, did they trigger? And if the answer is no, then the answer is no. Just kind of watch it. I've got some trades that are hurting me, Joe. Well, we've had a few days up that have hurt, but if your overall look at the market hasn't changed, please do not mess with your positions. Wait until price confirms a direction before changing or adding bearish positions. If you're sitting in 3 or 4 positions and you want to have 15, tough cookies. Wait until they start to trigger. Wait till it rolls over, then go ahead and start to add a few more, so on and so forth. But if it goes to the upside, you're going to be happy you didn't add all those positions, because now you got to start to hedge out maybe some of the bearish exposure you've been sitting in over the last week or so. What do we got going? Not a lot. A lot of Fed speak. Powell speaks on Thursday. Unemployment claims. Those are the only 2 things that carried any sort of weight. But based on the reaction I've seen with these markets, I don't even know if unemployment claims will shake the markets one way or the other. Powell does speak, and he could change some things. But let's not try to trade that. Let's just follow along with the markets. Earnings. We're in the midst of it. I didn't get a chance to check these, but JB Hunt, United Airlines, Interactive Brokers, Penn Financial, and then tomorrow we got Tesla, Procter and Gamble, Abbott Labs, Netflix. You guys can read them all. And I don't know when they are. I imagine Tesla to be aftermarket. PG might be pre-market. If you want to go dig deeper, please do. Now, there's more than that for the rest of the week, but these are just tonight and tomorrow to be aware of. All right, folks. As always, thanks for joining me, and we'll talk to you guys next time. Bye, everybody.